morning. This is Horizon's Middle East and Africa. Our top stories this morning. Potential breakthrough. Iran says it has reached a shipping agreement with Oman. The deal marks a step towards reopening the Strait of Hormuz. Trump's new tariffs. The U.S. president readies fresh trade measures to strengthen U.S. chip and solar production. And hackers target major Wall Street hedge funds in a wave of fresh attacks. Bloomberg learns the attacker attempted to infiltrate systems at Point72 Millennium and Citadel. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. A lot of stories to get through today, whether it's AI, the geopolitics in the region. But before we get through all of that, let's take a quick look at where markets are sitting this morning. Starting with U.S. futures, a little bit of moderation from moves we've seen over the course of the week, about 0.2% higher. Now, the S&P did close in the red yesterday following 4 sessions in the green. Nasdaq did pretty much the same thing. We're also taking a look at Nasdaq futures this morning, and they are also in the red. A few things to keep in mind here. The chip rally seems to be moderating. We saw earnings from 2 companies yesterday, SanDisk and Western Digital. Both companies were trading in the red in the after hours. The earnings there were moderating slightly. SanDisk on the revenue was a slight miss. Western Digital pretty much in line with estimates. But again, we're taking a look at those. Something to bear in mind with those 2 companies, SanDisk in particular, while the stock did drop yesterday, the year-to-date performance is a whopping 470%. So there is still gains to be seen in the AI rally. But that is a name that we have kept an eye on since the beginning of the year and definitely since yesterday. Another name to keep an eye on is, of course, SpaceX. It did close 14% lower yesterday, wiping out about $225 billion in its market's value. But investors are looking at about $101 billion worth of stock that becomes available on Thursday. So later today, this is just a scheduled ending of a lockup agreement that is due to end today. Now, keeping an eye on Asian equities as well, 1.2%. Lower, taking their cues from the close in S&P yesterday. We keep an eye out on SoftBank earnings coming out later today and whether those will solidify the AI demand. And then Brent crude prices below $80 on the barrel, 0.3 lower this morning. Again, a moderate move in Brent crude prices. We'll talk momentarily about that agreement between Iran and Oman and what it indicates. And then, of course, the yield on the 10-year Treasury notes, 4.61%, not a big move. We're keeping an eye on the Friday monthly payrolls report and whether that will confirm signs of a cooling labor market, and it may give the Federal Reserve room to keep focus on sticky inflation and not the labor numbers. So we'll, of course, see what the Fed decides to do. Gold is an asset we're also keeping an eye on. It has gained significantly over the past day, and the U.S. dollar has been holding on to losses from the previous session. Now, turning back to the regional story, Iran says it has reached an agreement with Oman on a proposed shipping route through the Strait of Hormuz. The deal is seen as a potential step towards a reopening of the critical waterway for energy supplies. And according to Iranian Foreign Ministry spokesperson, a joint statement from Tehran and Muscat is under review and in the final drafting stages. For more on this story, let's bring in Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Stuart, this time around looks a little different. Is it different?
Yeah, it might be. I mean, it's the furthest forward I think we've got. And what's interesting here is it's an entirely new route. What's puzzling about that is exactly where that will be, because our understanding was you have this northern route, the southern route, we know they're working. We thought the route in the middle was pretty heavily mined. So where exactly is this going to be and how are you going to get inbound and outbound traffic? So there's a lot of details there that need ironing out. The other thing is the time frame for this. So Iran has made it clear this doesn't mean shipping's about to resume at a normal pace. And it's made this rather ominous remark that the timing will be dependent on US actions. Now, quite what that means, we don't know. Does it mean they have to lift the blockade? Does that mean they have to do other things? In other words, it seems to be conditional. However, relative to, let's say, 3 or 4 days ago, it's definitely a step forward.
So this is regarding the Strait of Hormuz. What does this whole thing mean for the wider negotiations? There is still no formal talks happening between the U.S. and Iran on the concessions that we spoke about multiple times, the nuclear component, the assets, the oil sanctions. This feels like it's boiling down just to the Strait of Hormuz.
Well, look, here's the playbook, I think, which is deal with Hormuz first. That gives everyone breathing space, notably the global economy and all the associated industries with it, and all the central banks that are looking quite worriedly at inflation. And then that gives everyone a little bit of time to sort out this other stuff, maybe. But I in no way mean to suggest that's going to be easy. It's going to be incredibly long negotiation, I suspect.
Yeah, and Qatar, we understand, is also mediating or trying to mediate in those formal talks. Stuart, as always, thank you for your time. Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Now let's carry on with these conversations regarding oil. Oil prices are steady as energy markets look to how the Iran-Oman deal will be implemented and how long it may take for shipping in Hormuz to return to pre-war conditions. Let's get more from Bloomberg's energy editor, Stephen Stipczynski. Stephen, good morning. Good to have you with us. What are the recent movements of the shipping through the Strait of Hormuz, the physical traffic, really?
Well, the visual traffic remains still quite weak. We haven't seen a significant uptick in ships going through Hormuz. It's been very low since that interim peace deal between the U.S. and Iran fell apart weeks back. But just over the last 24 hours, we had one tanker hearing 2 explosions around Hormuz, according to the UK Navy. That's clearly indicating that there is still tension in that region. Over the weekend, an LNG tanker was hit. It was carrying Qatari LNG, and another ship was nearly hit. So while there is a now some sort of deal between Iran and Oman to get more oil and gas through Hormuz and to get traffic back to normal, I think the big question will be: does this result in the Iranian regime allowing for ships to not use their route potentially, or for ships to go through, or do they have to get authorization from the Iranian government, or else they could be attacked? So I think the big question is: will there be a continuation of hostilities towards ship in the region? If there isn't, then you could start to see more ships potentially go through.
Stephen, the market seems to be moving in tandem with the geopolitical headlines. You see positive news coming, oil drops. You see negative news coming, oil immediately jumps. But in reality, even if, let's say, theoretically, the Strait of Hormuz opens up tomorrow, how long would it take for navigation, do you think, to return? And how do you think energy markets would respond to that then?
That's a really good point, because in the previous, interim deal where we did see an uptick in Hormuz traffic in the middle of June, there were a lot of ships stuck within the Persian Gulf, and a lot of those volumes started to go through, and that resulted in a wave of supply, especially to Asian customers. We're not in the same situation at the moment, so you're not going to see the same wave. So instead, you're going to see a trickle, and then that will slowly build up over time. It really depends on the risk profile of the exporters, the ship owners, and even the crew on these vessels as to how quickly it will come that we're back to pre-war levels of 140 ships going through this really key waterway on a daily basis. This is, for some analysts, not a matter of weeks. It will be months for traffic to come back to normal. Now, for oil markets, it's able to absorb it. You'll see a drop in prices, and there might be some periods of tightness, and some refined products could be expensive for longer, but I think you'll see a continued fall in Brent and WTI. It's European gas, which could rise if you don't see an uptick in traffic very soon before the winter time.
All right, Stephen Stipczynski with the latest on those oil moves from the U.S. this time. Thank you, as always. Now, still ahead, our next guest says he remains neutral on equities but continues to favor technology. More on where he's finding opportunities in tech across the region with ING Belgium's Vincent Juvyns next. This is Bloomberg. President Trump is said to be preparing to impose levies of at least 15% and minimum prices on imported polysilicon. The move is seen as a bid to boost domestic production of the material and reduce reliance on Chinese supply chains. We're now joined by Bloomberg's China correspondent Minmin Lo with more details on this story. Minmin, good to have you with us. Can you just walk us through what the measures that President Trump is set to announce are?
Yes, Abir, this is coming from sources who told Bloomberg that the Trump administration is looking at imposing tariffs as well as minimum prices on polysilicon as well as their derivative products. So things like solar modules, silicon wafers, and they're looking potentially at a 15% tariff, which is lower than what some analysts had been expecting. Some were anticipating 25 to 35% tariff. So this is better than expected. But we did see U.S. solar stocks fall on the back of that, and the concern is that the production capacity in the U.S. is already limited. Some of these companies rely on imported polysilicon, and of course the tariffs could raise the cost of production, and that might have to be passed on to consumers. So in the short term, it might be harmful for these companies, and that's why we're seeing the stock reaction there. The Trump administration is said to be planning some sort of temporary offset program for these companies on the condition that they invest a certain level of capital investment in the U.S. to try to reshore production. But some of the other issues with these tariffs is that they might be very difficult to track, because when it comes to the polysilicon that are used in chips, once they are used in silicon wafers, made into chips and then packaged into electronics, it might be technically not very feasible for companies to track the origin of these polysilicon.
And Minmin, what is the response? How is China hitting back at the United States?
So we haven't heard from China when it comes to this, the reaction in particular to this polysilicon tariffs, because it's quite new. But China has unleashed a barrage of measures against some of the earlier curbs that the U.S. has imposed, including those import curbs on Chinese drones, robots, routers, for example. So China now announces that it is imposing these export curbs on drones to the U.S. as well as their components. Now, remember, the U.S. was first to impose import curbs on Chinese drones, but they apply to future models that are not yet approved by the U.S. China is now taking it a step further to place restrictions on exports of even existing models of drones. And remember, the Chinese firm DJI accounts for 70% of commercial drone sales in the U.S., so this could have tremendous impact. China is also launching its very first foreign trade national security probe into things like copiers and printers. It's also sanctioned some 6 different U.S. companies, as well as a testing lab called Compliance Testing, which helps the U.S. FCC to impose these regulations. So a slew of measures, which China for now says is still very restrained, and they're warning that if further measures are being imposed by the U.S., they will take even stronger countermeasures.
All right, Bloomberg's China correspondent Minmin Lo with the latest on the latest tariff story. Now, moving on to markets, Asia stocks are extending losses as chip makers come under renewed pressure, with investors reassessing the AI trade after last month's sharp rebound. Joining us now to discuss this and wider market moves is ING Belgium's Chief Investment Strategist, Vincent Juvyns. Vincent, good to have you with us this morning. We're seeing market moves again in Asia. We're seeing a little bit of a moderation in the U.S. picture. You're overweight on technology. Now, the question is, when does that change? When do you think, all right, now it's time to exit and downgrade or become neutral?
Oh, I can tell you this topic is debated almost every day with at ING on the floor. Look, we are long-term investor, we are fundamental investor, and we need to acknowledge that after the earnings season that we've been through in the US and globally, what you see coming out from tech earnings, they were generally good. A couple of them, and we've mentioned earlier in the show, you have semiconductor companies posting earnings growth to the tune of several 100% on a quarter. You have an outlook which remains remain pretty robust with multi-year contract with clients. So you have also some visibility and valuation. Look at the semiconductor themselves; they're trading below 10 times PE, sometimes even below 5. And to me, what was important in the earnings season is also to see that hyperscaler clearly showed that they were able to monetize AI. So throughout the value chain, you have quite a pretty robust backdrop, but investors keep questioning the outlook, obviously. The jury is still out about the impact on AI on our economies and on financial market. But at the moment, fundamental, in our opinion, plead for still a position in the sector.
So how do you view the competition that is emerging from China when it comes to AI with US-centric names?
Well, it was to be expected when you see the level of price rise that you see in semiconductors, in memories. It's every industry would see newcomers try to capture those type of high price and high margin market. But ultimately, and we see it again with the higher tariff on some climate tech from China, the competition between the US and China will remain. So we're probably likely to duplicate the infrastructure, one another not trusting each other. So not sure if it's great from a global economic standpoint, but at least for the industry, this means that you will have a lot of duplication, that US companies are likely to buy Chinese system and the other way around. So both industry can thrive in parallel, I would say.
So just moving on to the geopolitics, we have new headlines from this morning. Well, we have new headlines every single day. So when it comes to those, do you overlook them now? Do you just have a long-term vision on the oil trajectory and choose to not look at the geopolitical headlines that are out every single morning at this point?
Well, overlooking, we cannot do it totally, but for sure we refrain from any enthusiasm at the moment. We had so many false starts already, so many announcements. And when I read, obviously, what's being discussed at the moment, I'm a bit surprised. So the new agreement seems to give Iran some control on the traffic in the Strait of Hormuz, which to me seem quite to be a red line for the US. And obviously that seems logic to me. So to us, we refrain from any enthusiasm. We know that the impact of this conflict will be at least long-lasting, even if we have a ceasefire tomorrow. Your energy expert mentioned it this morning. At least for us in Europe, even if we have a ceasefire and a full reopening of the Strait of Hormuz tomorrow, gas market will probably remain disrupted for quite some time. And it comes at a bad time for Europe because our reserves are quite low at the moment. Winter is coming. We don't feel it at the moment, but we need absolutely to fill these reserves at a higher price. So the impact of the conflict in the Middle East will still remain present for us economically. And on market, you see that correlation between stocks and bonds remain quite elevated. So prudent positioning overall at the moment from a stock bond perspective, looking at opportunities within asset class.
All right, Vincent, we will have to leave it there for today. ING Belgium's Chief Investment Strategist, Vincent Juvyns, thank you for your time. Now, coming up, some of Wall Street's biggest hedge funds have been hit by a wave of voice phishing attacks. We'll bring you the latest on that story next. This is Bloomberg. Bloomberg has learned that hackers launched a wave of sophisticated attacks on Wall Street firms, targeting information system at major money managers. Point72 Asset Management told investors that it had been attacked, but there was no initial sign of stolen client data. For more on this story, we're now joined by Bloomberg's Jill Deeses. Jill, good morning. Good to have you on. How was the attack carried out, and who else was targeted in this?
Good morning. So this was a pretty sophisticated series of attacks that was carried out by, in part, by using a method called voice phishing or vishing. Essentially, this is where the cyber attackers use technology to emulate the voices of people that they think might convince others to give up sensitive information. So it's a pretty severe, sophisticated form of cyber attacking that we're really kind of seeing here. We've seen this kind of activity grow in recent in recent years. But it's definitely that kind of like spoofing and posturing that you see not just obviously by message, but also potentially by phone call as well. So that's really what we're looking at here. You just mentioned Point 72. A couple of other hedge funds that were targeted include Millennium, Two Sigma, Citadel. Two Sigma did say that it's thwarted those attempts to hack it. Others have not commented at this time, but does give you that indication that this appears to have been a pretty widespread attack on these major hedge funds.
And Jill, we've been looking at similar news since the beginning of the week, really. It's been happening almost every day that we hear these headlines. Why are these cyber attacks surging across Wall Street?
Right. Well, maybe it comes as no surprise that in large part this is because of advancements in artificial intelligence models. So that's a pretty significant uptick there that you've really seen over the past year, particularly as some of these AI models have become sophisticated enough to ultimately help these hackers. We actually spoke to one expert who pointed out that in previous eras you might have had a cyber attack able to make 50 attempts. Now that's up to about 1,000 or so because of the advancements in this kind of technology. So you are looking at a world where that type of technology maybe is, able to enhance certain developments, but also obviously able to help cyber attackers become more sophisticated as well.
All right, Bloomberg's Jill Desis with the latest on those attacks. And sticking with those, a Meta AI model reportedly accessed the internet during cybersecurity testing and breached another company's systems. According to the information, it happened because of an error in the sandbox testing environment. And it comes after OpenAI and Anthropic disclosed similar incidents of their AI models taking unsanctioned actions during safety tests. And Bloomberg has learned that situational awareness founder Leopold Aschenbrenner has made a $400 million investment in a private company. The move comes after the hedge fund nearly collapsed under a barrage of margin calls from lenders last week. The fund was hit hard after a slew of its public technology investments before Aschenbrenner reached a deal with Citadel to offload the bulk of his portfolio. Now, before we head to the break, a quick look at where equity benchmarks are sitting. We're seeing S&P futures 0.2 higher, Nasdaq 100 now completely flat, and Dow Jones, as well as Euro Stoxx 50 futures also gaining this morning. Oil prices moderating from moves we've seen over the past couple of days or so. But coming up, we will talk to Aathira Prasad, Director of Macroeconomics at Nasser, Saidi and Associates, about the impact of the closures in the Strait of Hormuz and what they're having on Middle Eastern economies. That is coming up next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Potential breakthrough. Iran says it has reached a shipping agreement with Oman. The deal marks a step towards reopening the Strait of Hormuz. Trump's new tariffs. The U.S. president readies fresh trade measures to strengthen U.S. chip and solar production. And hackers target major Wall Street hedge funds in a wave of attacks. Bloomberg learns the attacker attempted to infiltrate systems at Point 72, Millennium, and Citadel. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Let's take a quick look at where markets are sitting at half past. We're still taking a look at U.S. futures, 0.2 higher, moderating from moves we've seen since the start of the week, but they follow a negative close in the S&P 500 yesterday, about 0.2 slower at the close. We also saw the Nasdaq 100 closing in the red. We're keeping an eye on some individual names. Now, the AI rally has been moderating. It still continues, but in moderation. We keep an eye on two names, or I was taking a look at those two names yesterday. One of them is SanDisk, which fell in after-hour trading after earnings. The revenue, a slight miss there. And also Western Digital, they also provided earnings in line with estimates, but investors weren't all that excited about that. So both names had fallen in after-hour trading. SanDisk, however, the year-to-date performance in that name is a whopping 470% higher. So if you look at the overall picture, it's still pretty positive for those names in the United States. We're also keeping an eye on SpaceX. It did drop about 14% at the close yesterday, wiping out $225 billion in its market value. But investors are keeping an eye at $101 billion later today worth of stock that becomes available for trading. This is the scheduled ending of a lockup agreement that is due today. So something investors are keeping an eye on. Asian equities taking their cue from the close in the S&P yesterday, 1% lower. We have Winnie momentarily to talk to us about what is happening there. And then Brent crude prices 0.5 lower, the moderation in the escalation in the region, and a possible deal between Oman and Iran being drafted or gotten drafted, and we'll have to wait for the details about that. And then the yield on the 10-year notes not doing much today, about a basis point lower. But if Friday's monthly payroll report confirms signs of cooling, or if of a cooling labor market, it may give the Fed a room to keep their focus on sticky inflation rather than employment figures out of the United States. And then in other commodities, we're keeping an eye on gold that has climbed to about $4,300 an ounce after posting its biggest gain since February. And then the US dollar, of course, which has held on to its losses from the previous session. Now, for a look at what is happening in Asian markets this morning, we've got Winnie Su standing for us in Hong Kong. Winnie, what do you have for us this morning?
Yeah, good morning, Abir. Well, we are seeing Asian stocks under quite some pressure today, following those disappointment from the likes of SanDisk and Western Digital. Now, as you mentioned, the expectation is just sky high, but investors still want to see more when it comes to stronger guidance and even stronger pricing power. And that's why we are seeing memory stocks, specifically in South Korea, leading losses today. Japanese yen continue to stabilize around that 157.7 handle, and also we are seeing bonds holding on to their gains after we saw firmer demand from that 30-year bond auction just earlier. Flip over, we take a close look at the key sector to watch today. In fact, it's all about that trade between U.S. and China. Interestingly, we are seeing solar stocks here in China falling after we've learned that the U.S. is planning to impose further tariffs and minimum prices on the polysilicon. But in that retaliation towards the U.S.'s tech curbs, China has also unveiled some of the measures when it comes to further export controls on drones, and even some of these reviews on the office equipment imported into China. So you're seeing those names domestically rising as well. Now, flip the board, we take a closer look also at the commodity space, because that bright spot today really is in the gold-related names and also the mining sector, as gold continues to extend gains amid that optimism for the Strait of Hormuz to reopen. Back to you, Abir.
All right, Bloomberg's Winnie Su in Hong Kong with the latest on markets and commodities. Now returning to the regional story, as optimism for the reopening of the Strait of Hormuz gains traction, another crucial waterway faces disruption from conflict in the Middle East. The Houthi militant group yesterday announced they would attack Saudi ships in the north of the Red Sea, and that they had targeted an oil tanker in the Gulf of Aden. To discuss this story, I'm now joined by Bloomberg's managing editor for the Middle East and North Africa, Paul Wallace. Paul, another aggression that is happening in the Red Sea as we look at positive news happening in the Strait of Hormuz, or possible positive news in the Strait of Hormuz. Why are Saudi tankers being targeted by the Houthis?
Well, it's certainly very worrying for Saudi Arabia, and to be frank, the energy and commodity markets as a whole. This is something that the Houthis have threatened that they would do. Then made this announcement that they were blockading Saudi ports, effectively those in the Red Sea, a few weeks ago. And these attacks have ticked up. It is possible that this is very much linked, though, to the negotiations. It's not totally implausible that, Iran is encouraging the Houthis to do this as negotiations sort of get to the end point so that it can increase its leverage over the US and get the best terms possible. We have seen this thing happen time and time again during this war, where when the negotiations at certain phases in the war get to the crunch point, there's a slight uptick in aggression by both sides as they try and increase their leverage.
Okay, that's actually really interesting. But generally speaking, what does this mean, or what do these attacks mean for the prospects of supply chains continuing to take course?
I mean, what we potentially have is a second major choke point, in this case Bab al-Mandeb, being effectively closed after Hormuz. Now, that's a huge worry for major economies around the world, and certainly the US. I mean, ultimately, the Houthis may well sort of decide to ease tensions, especially if there is some kind of deal between Iran and the US on both Hormuz and then later on with Iran's nuclear program. That's a big if, of course, and there's certainly a lot that could go wrong. But the fact that the Houthis are effectively, or they're very much showing that they're capable and willing to attack ships in the southern Red Sea and Gulf of Aden, and that they have the capability to do that, is a big concern. Even beyond this war, whenever it ends, the fact that the Houthis are there and they have that ability is a problem.
All right, Bloomberg's Paul Wallace with the latest on those developments. I hope you're getting some sleep these days, Paul. Just some news from President Trump now on Truth Social saying that the U.S. has enough munition, essentially. So that is another development. But for more analysis on what the latest headlines on the Strait of Hormuz and the Red Sea mean for economies in the region, we're now joined by Aathira Prasad, Director of Macroeconomics at Nasser, Saidi and Associates. Aathira, good to have you with us this morning after the conversation I was having with Paul just now about the Red Sea. We're taking a look at the Strait of Hormuz. We're taking a look at oil disruptions. When it comes to regional economies, what does this period of no war but no peace really mean for GCC countries in the wider region?
Well, it has affected different GCC countries differently. Of course, Saudi and UAE seem to be relatively more sheltered in some way or the other. But if you look at the recent PMI numbers that have come out for July, they are quite indicative of the kind of sentiment that's facing in the region. You have UAE and Saudi much stronger than the others. But given the period of relative calm, if I could call it that, countries like Kuwait have seen PMI numbers come back into expansionary territory, which is a good sign, saying that, people are gearing up for a potential solution, hopefully in the near term. So these are good signs that are coming. You have to remember that these countries have adapted over the few months that have passed since the war started. Yeah. So you are seeing a lot of new pipelines being talked about. You're seeing new corridors being opened in terms of logistics. And you are building resilient infrastructure that could be beneficial in the long term.
But that effectively means that they're doubling down on oil when before all of this we were talking about years of efforts to diversify. So do you think that after this they're going to double down on diversification or finding those ulterior routes?
I think diversification efforts have very well worked in their favor. If you look at the numbers, you're not so dependent on oil that much as you used to before. But you still have to account for the geography of the region, right? However resilient you are in terms of export diversification away from oil, you still have some oil exports that still matter to how countries do their fiscal planning and economic growth planning and so on. So that still exists. yes, the geography still matters. But what you're seeing is that there is a lot of domestic resilience that's happening because you have more diversified economy. But you still are constrained by external sentiment, right? That's still under the weather till
Of
this
course,
gets
but
resolved.
do you think that the countries in the GCC, namely the big ones, would have emerged from this sending a message of they are more resilient? Or do you think that there are lingering concerns under the surface, for example, that investors or that people generally are not bearing enough attention to?
No, I think diversification is the key talking point. I think that's a message that's going to continue. They are resilient and they are trying to diversify, even in terms of trade partners. Not just, it's no longer just about the commodity that you're trading in. It's also about trade partners, right? The more trade partners you have, the better you are off in shipping in different directions, so that you're not restricted by a certain specific choke point or a few choke points. So that is the name of the game. Diversification is only going to get stronger.
And you mentioned the PMI figures that came out yesterday for Saudi.
Yes.
We're taking a look at those, and they're still pretty much in growth territory.
Yes.
Why? I mean, I guess why do you think that is?
I think it's to do with the two engines. So domestic sentiment is quite high. Given that you have airspaces opening up, you're having a sort of slow expansion sentiment, I could say. So the firms are gearing up for better prospects in the near term, but it's still a bit cautious, right? Because if you look at things like export orders and so on, it's not recovered to the levels that it used to be before. So basically, I would think that it's a more domestic demand-driven sentiment rather than, a whole-scale, broad-based recovery as such. But the signs are there. So hopefully, once things get resolved, you would probably see things going back to normal quickly.
And Aathira, just finally, do you think the world is still convinced on this region? Do you think that the deal flow, for example, which is a big part of their economic growth story, will continue?
Yes, I think so. I mean, if you look at some of the recent numbers that have come out of, say, the DIFC or the ADGM, companies are still very willing to come and locate here in the region, to not just for the region, to, countries. I think the big picture in terms of how the region is developing is a very strong one. It's a very strong story. So companies from all over the world are happy to come and locate here, even though this is maybe a small period of, uncertainty. But once things go back to normal, it would still be a place that you want to be located.
Okay, Aathira, we're going to have to leave it there. But thank you, as always, for your insights. Aathira Prasad, Director of Macroeconomics at Nasser, Saidi and Associates. Now, coming up, Kenya seeks emergency funding from the World Bank to offset the impact of the Iran war. More on that story next. This is Bloomberg. Bloomberg has learned that Kenya is in talks for $450 million in emergency funding from the World Bank. This financial cushion aims to offset economic shocks caused by the Iran war and weather risks from an upcoming El Nino. For more on the story, we're now joined by our Chief Africa Correspondent, Jennifer Zabasaja from Johannesburg. Jen, good morning. Can you give us just a quick background for Kenya's request for this emergency funding from the World Bank?
Yeah, of course. So based on our reporting, Abir, what we're hearing from Kenya is that they're dealing with constrained public finances. This has been something that we've been watching closely since the beginning of the war, but Bloomberg reporting is suggesting that the public finances that are constrained are part of the contribution to that is high debt repayments. There's mounting arrears to government suppliers, and then also debt repayments, as I was just mentioning there. That has contributed to what we are seeing and what the expectation is for economic growth in Kenya in 2026 being 4.3%. Compare that to what we saw in 2025, which was about 4.6%. So a lot of it speaks to what you were just saying there. The Middle East war has had a contribution. Exports for Kenya has also been hit. It's the world's biggest exporter of black tea. Also, flour is a big export engine for the country. And given what we're seeing in the Strait of Hormuz and remittance flows through the Gulf that have been constrained, that has taken a hit for Kenya. So they're looking to tap this emergency funding, especially ahead of what many analysts and what the expectation is for the El Nino to hit countries like Kenya even harder in the upcoming season. And potentially this will stem some of the worst effects of that for the government to deal with, and also for public citizens.
But Jen, there's also a growing list of countries really that are seeking financial aid. Can you talk to us a little bit more about what those are and why?
Yeah, so in addition to Kenya, we're also learning of Malawi. There's also the Democratic Republic of Congo. There's Bangladesh, and also very interestingly, Sierra Leone. And really, many of these countries are looking to tap the World Bank's facility to, as I was just speaking to help their own economic situation, but then also protect people, businesses, and really the economy from some of the shocks that are unexpected to come. What's interesting in the case of Kenya, and what's important to remember, is that this contingent emergency response project, it repurposes funding that was already allocated to Kenya. And what it does and what it enables is a country and a government to redirect up to 10% of undispersed funds to deal with some of these emergencies. And this is really what the facility is there to do. It's whether or not countries are in a position or need to actually tap this funding. And so we'll wait to see whether or not, or when this actually gets confirmed. But it's important to remember that this is already a part of existing funding that the government was already allocated by the World Bank. It's just there in the case of emergencies.
All right, Bloomberg's Jennifer Sapasadra, our chief Africa correspondent, following that story for us in Johannesburg. Now, for a look at some of the other stories that we're following, the IMF says Ghana's central bank lost $1.9 billion in 2025 under a domestic gold purchase program. The program was designed to boost the country's foreign exchange reserves, and the gold purchases helped raise Ghana's gross international reserves to $11.9 billion by the end of 2025. However, the associated trading losses deepened the central bank's negative equity position to 6.7% of GDP. Nigeria tightened rules for virtual asset transactions to crack down on tax evasion and boost revenue from one of the world's largest crypto markets. The measure adds to other policies enacted by Africa's most populous nation last year to overhaul its tax code to raise revenue to 18% of GDP by 2030. And South Africa will hire advisors in the coming weeks to begin negotiations with lenders on a plan to spin off state-owned power utility Eskom Holdings transmission subsidiary. The move is part of the government's efforts to open up the electricity market to greater private sector participation. Coming up, short sellers are circling SpaceX as a massive $101 billion in stock to unlocks hit the market. We'll have more on that story next. This is Bloomberg. Investors hanging onto SpaceX shares after a plunge below their IPO price are bracing for the next potential hit. $101 billion worth of stock becomes available for trading later on Thursday, and the massive influx of stock could trigger further volatility. For more on this story, we're now joined by Sam Unstead, who's in Hong Kong this week. Sam, good morning. Good to have you with us. What can we expect, really, from the unlocking of those SpaceX shares?
I mean, that is a great question, Aathira, because I think so much stock is coming onto the market. In a relatively short time as a listed company, SpaceX everything they do is kind of enormously larger than life. And so this unlocking is an enormous amount of money, over $100 billion. It will double, more than double the number of SpaceX shares on the market. So there's still quite a good retail demand. SpaceX shares fell quite a bit after their results this week, but there's still quite a lot of good, solid retail demand. So it may well be that it's kind of swallowed up by the market relatively easily, but very unlikely that's going to happen comfortably and without some sense of volatility. And again, already in this short time that they've been listed, they've become one of the big drivers of volatility when they do something really major like this.
Sam, you and I have spent a lot of time talking about software, but also memory makers in London. We also had earnings yesterday from some of those memory makers, SanDisk, Western Digital. Both stocks had fallen in extended trading after a disappointing guidance. But we're also expecting SoftBank earnings later today. Are they expected to solidify the AI rally? What else are you expecting out of that?
Well, I think, so I was going to mention, two of your favourite stocks, I believe, SanDisk and Western Digital. But, two companies who delivered, on the face of it, very strong results. But the expectations are unbelievably high. And SanDisk shares just, coming into these results up well over 400%, nearly 500. Western Digital have tripled. So the bar is really, really high. And so, SoftBank comes into that as a more broad story, a more broad kind of overview of AI sentiment. So it'll be slightly different and probably treated slightly differently. But it's coming into a market where the level of enthusiasm has dipped just slightly because SanDisk and Western Digital weren't quite able to keep up to these incredibly high expectations that were set for them.
All right, Sam, we're going to have to leave it there with you today. Bloomberg's Sam Unstead. Now, for a quick look at where equity benchmarks are sitting before we head to the end of our show, we're taking a look at S&P futures, 0.2 higher. NASDAQ 100 falling today after 4 sessions in the green during open hours in the United States. Now they're 0.2 lower. Dow Jones futures and Eurostoxx 50 futures are gaining this morning, both 0.2%. We're also keeping an eye on oil prices that are moderating. We'll give you the latest on that draft between Oman and Iran if it does come out later today. But that is it for Horizons Middle East and Africa for today. Stick around with us for Daybreak Europe. This is Bloomberg.